and that way we're recording this now. This is a weekly on the Aussie dollar. There's potential downside, further downside. So this is the setup. This is how we're going to do it. So first, start with a weekly. Get our fibs. Look at the low. Look at the high. Note that the low was from last year, pandemic. So we're going up and up and up and up and up in a straight line. Yeah. So that's a nice move up. It hasn't really retraced. It thought about it here with the consolidation. Let me just move these figures over into the center. Here we had some consolidation, and then it drove up to 8,000, and off 8,000 we had a considerable notable drop. So that was really good. And if you scroll left on the high time frames as well, you can see where we're at. I mean, it's a really notable move up. We've had some really decent up moves. So common sense will tell us that we are due a correction, because we haven't had one really. We haven't had one for ages. Note where we're at right now. We're at a double bottom of this last push up. But we've had a strong weekly reversal, so I wanted to highlight that. So strong weekly reversal, we've had a move down, and we had a pullback and a continuation. So let's drill down. What I'm going to do is I'm going to divvy this up into chunks as well. First off, weekly showing a bit of divergence there, divergence. So we can do this. Take that last swing high, take that last swing low, and can see price somewhere around. Currently at the 161, we extended up higher, didn't we? We extended to 8,000, but quickly, immediately, pretty much reversed and dropped back down to this area here. So, you know, it looks like one final push up here, because we were consolidating here, and you could have been fooled into thinking it was going to curl over here back to previous structure, which is at 7.415. So 7.415, if you make a note of that level, 7.415 is where we're looking for potentially. Let's see what's on the way before arriving to that level, before we get to previous structure. So I'll do away with this. Let's just make sure that's done there. So 7.4. So we've made a note of that, so I can get rid of this because I don't want to clutter up the chart. Note as well, you can split your screen as well. You do know that, right? You can put stuff on there. You can even look at pound dollar like I've got on there, and Aussie dollar there, just to keep things in terms of dollar related pairs. Or you can have a dollar index on there as well. You know, you can split things accordingly. But what I'm going to do is I'm going to drill down to the daily, and I'm going to look at this move, this current move here. So on my daily, this is the last drive up. So I'm going to look at this and focus on that move as well. You can see 38.2 around 7619. See the way the price did a double bottom there and bounced off it perfectly. So it respected it with a double bottom. We had a good move up. Again, if I plot the fibs just to show you that bounce, we had a nice bounce to around the 61.8 before dropping. Another strong reversal, which was momentum strategy, telling you that this is, you know, still not done to the downside, and we are, you know, still very much bearish on the pullback. So that was nice. So just trying to bring you up to speed, just showing you the journey so far, so you can understand where we're going. I'm looking for further downside. I'm looking for the next move, because it's broken the 38.2 here. I'm looking for the next drop down to 7499, which is 7500. Nice round number, 7500 downside. Currently it's about 136 pips away, so it's got plenty of scope to get involved. I've got it on my chart here as well. I'm not sure if you can see it actually. Yeah, you can. So we're seeing very thin price action as we approach the end of the month. We may see some volatility. It might spike up one more time, but ultimately I've got some overextended levels here suggesting that we are due to maybe drop back down. So I'd look for 764 of this move. So just to put that into context, 764 of this bit of price action here as a T1. Let's do this. Let's put the fibs on this bit and write down the next target. So 7587. So round it up, 7590. Next downside for Aussie dollar, 7590. Okay, so you've got that on there as another target. 7500 ultimately being a 50% retracement, 50% pullback. Got fib extensions on here as well. So important to use the fib extensions. They give you 7500 as well, the 161 extension. Based on this current range, of course, if it goes high, then we would adjust it accordingly. But right now, based on what's happening with 7663, so 7664 area is where the stop losses need to be. Maybe 7665 roughly is so you can make a note of that as well. 7665 as a stop loss area, which is about 30 pips. That's all. That's why I like Aussie dollar. I was gonna look at the pound dollar for this setup, but I'll use pound dollar as a confluence in this on this occasion, because I don't know, I'm watching things like pound yen still pushing higher, and just watching the pound pairs have been quite bullish. So if it does push high, it could easily give you a 50 to 100 pip spike on pound dollar, but Aussie dollar doesn't do that sort of aggressive move. So in terms of stop loss management and risk management, I think this is nice, and I think potential downside will give you plenty of pips, because plenty of pips is that if we use an MT strategy, the MT saying a break of the 38.2, which it's done, it's now come up to retest that previous structure, retesting, so it might do a break and retest before it continues down. Potentially your big ultimate target is 7230, 7231 to be precise, so you can round that up a little bit, but on that last range, 7230 is the next downside, major downside that we're looking at ultimately. So we've got a couple of intraday moves which have given you the 76.4 of that little bit. If we drill down into it a little bit more and have a little look at this price action, if you want to be conservative with the stop loss, sure, we can do this, and we can say, okay, well, it's done a decent move, we're back above the 38.2. If it starts to bust up, we want to see what sort of a retracement we get. So we could see what's that, 7672 and 7706. So we could push up to this level, up to 77 area before dropping. So bear that in mind. But by all means, with everything that's happening here with the price action, keep an eye on the dollar index. If this starts to drop, the next candle, so this is a 4-hour candle, start looking at your 4 hour and your 1 hour. If we start seeing a bit of a breakdown, potentially we would look to get involved and take it down to at least 76.4 of this move. And then, like I said to you, the 127 would be the next extended level from an intraday point of view. Now if you want to swing this little baby and see if it gives you a bigger move down, if it does break down from here, then ultimately we are looking for 7230. Now you can dip in and out of this move as it's going down if it confirms a downtrend for further downsides. But that's just to make you aware now where we're looking in terms of further downside. Now, if I just scrap that, so that these are the levels here allowing us to look for where stop losses need to be. So stop loss management, we're using the 38.2 above, the 50% above, on this. There, we're using those levels as potential conservative stop losses. So you could have a little risk here for sure, and put a stop loss just above this current price action. But no, if it does spike up and take you out and goes up, then allow it to make as part of our 3 option rule, allow it to go up and test those fibs and see how it reacts before dropping back down again. If indeed it does. If it just starts dropping down into profit, then we get on this and we ride it down. So we've got to look at what the other dollar pairs are doing. We've got to look at the dollar index. But that's the play, and that's the setup for the Aussie dollar right now. If I just show you the other week, remember we had the Fed news on that Wednesday, which it was St. Paddy's Day, and I was trying to get in short on the New Zealand yen. I mean, New Zealand yen did do this drop after it spiked up and took everyone out, and it did do the drop, and it did give us like a good 200 plus pip move, which it would have been nice to get involved in that. And I could have got involved again on it, to be fair, but I was like, you know what, New Zealand yen, it's not a pair that I usually trade, and I think because it stopped me out, I was like, well, you know what, I'm not going to get involved. My money's done. I don't need to do any more. I'm just going to focus on the stuff that I generally trade. So, but the good thing about it, again, in terms of confluence, look at New Zealand pairs, look at Aussie pairs. They tend to do things together. You need to look at the dollar index as well, and look at the other dollar pairs like pound dollar and euro dollar, for example. So we had this pump. It looked like it was going to curl over. So if I do the fibs on this as well, because this was the last major move, initially my fibs are like this, and I was looking at the way it was coming down to that 618 at 76.90. Then we had the spike up. So I would adjust my fibs, and we know that's a kind of a pump and dump type move, which I'm looking and exploring on the. We've been talking about it on the Euro New Zealand, so you had to wait a little bit. But as of yesterday, it started breaking down that Euro New Zealand, just to highlight that one as well, because that one's moving nicely to the downside. It's basically done this. And we said, okay, if it breaks this pump up here, again, put the fibs on, this move. Every time it makes a move, every time it creates a range, we put fibs on. Because what we're looking for is how it reacts at the 76.4. We know that if it does this, it could be a first move up, pulls back to the 7.6, which it did here, bounces off that, get a reaction, fine. Now, if it started going back up here, then we know that this is the first move of a potential Elliott wave move, which is a wave 1, a wave 2 pullback to the 764, and then a wave 3 would be a nice move up to confirm that this is indeed a bullish move and this was the first pump. But on this occasion, it was purely manipulative, and it was purely off the back of that Fed news. They pumped it up, they stopped everyone out who was trying to go short on this, and then they've dumped it down, and that confirmed once it broke the 76.4, which is why I put so much emphasis and importance on that 764. Because it breaks there, we know change of sentiment, this was just the move, and now we're going down, we're going to see further downside. And what happens, we didn't have to wait long, it broke. So first target, let me just remove this, because that's just to give us the guide and, you know, to help us draw that line in the sand and say, right, if it breaks this area here, you know, it's going down. So it broke. First target would have been on this occasion 7675. It's torn through that. So the next target, as I've been showing with the pound yen setups as well, of MT strategy and the momentum, the 764 and just the strategies combining, you know that next target is the fib extensions. So 127, which it's missed it by what, a pip or so. That's why I always round my targets up or down. You know, if the target is, if the fib is at 7.5, I'll quite happily take profit, maybe 3, 4, 5 pips before that. Just because it just makes sense to do that, to ensure then that I do get limited out, that it does actually hit my target. Sometimes it will stab on down through the fib. Sometimes it will stop just shy of it. So in any case, I want to be out of it. I don't want to be holding this. And if I'm not around for it and it bounces up, I'm like, you know, missed your target. Nothing worse than missing your target by a pip. So right now, it's done the move down. We've had the volume diminish. This is a 4-hour chart. We're in bullish territory right now. So that's why we're just sitting tight and just waiting, because we are crossing over on the awesome oscillator. We're in bullish territory. So this could suggest going up higher. So what we'll do is on this occasion here, we've seen the journey so far. I've brought you up to speed with it. We can remove all that. We can now pull this high, pull this current low, and just focus. I showed you this already. Just focus on how it reacts. And ultimately, you want it to hit one of these fibs before dropping. But like I say, it's not an exact science. We've got like a double top going on here. If we drill down, we can see, we can see that it's tested, sort of tested there, tested again. You know, it's about 3 times tested this area. Consolidating, a bit like gold when it does a consolidation before finally dropping. So if this basically breaks this current structure, breaks here as a 7, maybe put an alert on that 7620, for example, or 76, low 7, about 7620 here, or 7625 even, because it's, where is it at the moment, 38. So that way, if it does stab down and have another go to the downside, because, you know, even here, if you really want to scrutinize things, again, I've just said to you about ranges. Every time there's a range, you can drill down and look at this range in detail. No problem at all. We could put this on a 5-minute chart or 15-minute chart. Look at the pullback, monitor it. So then you know it's retraced to one of these key fib levels, and then it's curling back over. You know, you think, actually, look, it's done a 38.2. So let's see if it breaks this previous structure here at around 7.5. And if it does, we're shorting it, basically. So you can make sure you don't miss out on this move. But ultimately, we'd love to see this just push up, back up to these fib levels into the mix, just at least one more time. But like I say, sometimes it might not do it, but they're there for reference. So we'll leave that like that, and we'll watch it. But I am looking for further downside. If it fails at this level, if these levels fail right now, I'm looking for further downside. Ultimately, bigger picture, looking for 7,500s. Ultimately, 7,500s when all is said and done, and then below that 7,230s. So that's giving us potential for anywhere from 100 to like 300 pip, 400 pip move to the downside, so further downside. So the reason I'm bringing this to your attention is because we want to prepare, we want to plan ahead, we want to forecast, project, you know, do all of that, because failure to prepare, prepare to fail, failure to prepare, all that, prepared to, like I said yesterday to the guys, Some of them, someone was asking me, why do you put such big targets? It's like, it's not necessarily that I'm going to swing this move all the way down, but I need to know, as a roadmap, I need to know where this is potentially going to. And then if it starts to develop and play out, then it doesn't come as a huge surprise when it starts to drop. Like with gold, it was no surprise it was going to go down to that 764, to the 1700. It was just a case of having to wait over 2 weeks, really, and endure a lot of chop and sideways movement. So that, you know, that is often factors beyond your control. So all we can do is plan it and note that if this drops, starts dropping, you've got your targets. I've given you your targets, potentials for stop losses. If you want to get involved on this one, this has got potential. It's got good potential. I'm just focusing on this area for now. You know, it's too much to want to look at the bigger picture. So we've just dissected this into sizable, digestible chunks. So hopefully you find this video helpful as well. I'm going to put this video out there for everyone else so that they can benefit from it as well. Okay. Any questions?
No, that's it. That's pretty good.
Okay, so there's one for you.